in its sleepy, safe, snoozy little lovely happy place of 65 plus $1 or $2. Omar Najia, derivatives trader at BB Energy. What's going on in the world? Everything's back to normal. Trump and Xi are going to do a big love in, and prices are going to do nothing. Your thoughts?
Well, I mean, I think you've got to look at this market in terms of a little bit of, look backwards a little bit. Market was positioned extremely short that it's ever been. And then all of a sudden something happens and we pop big to the upside. But I get it, and the lows basically held. So I think, the market is kind of trying to say that, prices are too low. And if the market really wanted to, head lower and considerably lower and test like 30 or whatever it is, it would have. The EIA was looking for, I think, $59 Brent in Q4 and $50 in the first quarter of 2026. The problem is that the EIA is not exactly impartial, right? And it's, so I think basically, you look at all this stuff, you look at the Z meeting, you look at like interest rates in the States, you look at what's happening around the world, you look at equity markets, you look at gold, you look at Bitcoin, you look at all of that stuff, and it's all going up. And I think the last thing that's going to go up or that will go up, it's not if, it's when, is oil. And when that goes, then I think, the cat's among the pigeons, and that's it. Because you can always tell the people that, no, inflation's not that high. It's, because they keep fudging the numbers on CPI. But once you start, heating your home and paying for gasoline and all this kind of stuff, there's nothing to defend. So I think prices are going higher and extremely, very much higher, basically, not only into the end of Q4, but, into 2026. I'm bullish.
Clyde Russell with Thomson Reuters, or not Thomson anymore, Reuters down there in Australia. Clyde, giving us the perspective, we get this story so often through the prism of the endless Trump prism headline, the world according to Donald Trump. But from a China perspective, looking at this Monday morning, where the Mandarins have put together the framework of a deal that it would appear the Trump and Xi will ratify this week. From China's perspective, is this a win? Does this mean the economy is going to grow more? They're going to consume more oil? From a China point of view, what does this weekend's news mean?
Well, let's make the assumption that it actually turns out in reality to be something close to what has been reported as likely. So basically, we have this situation, we go back to like 2019 when Trump cut a deal with China in his first term, which included a lot of promises, of which very few were actually ever delivered. So that's kind of, I see that as a sort of baseline. Where there's good news is that this will probably mean that your rare earths, critical minerals, magnets, all those kind of things that the West needs, they will probably continue to flow out of China. But, the China will realize that that is a threat that works, and they'll hold on to that threat, if things go south again. Will China start to buy masses of US soybeans, crude oil, LNG, and even coal? I'm skeptical. I think they'll buy some, particularly the soybeans, because that's an easy one and they do need the stuff. The rest of it will be interesting to see. I think it's, it might be a case of another sort of like Trump deal with the EU, which I wish I'd invented this term, was an empanada deal, which is everybody makes promises and nobody delivers anything. That's kind of, what I feel might be happening with Trump's tour around Asia. A lot of headlines, very little substance.
It does appear, Clyde, that in the bigger picture of things, over a long period of time, China has been decoupling their exposure to the US, most notably in treasury bills. They've cut their exposure down by nearly 50% over the last 5-6 years, from 1.5 trillion to sort of about $700 billion worth of treasury bills as kind of like the signature exposure to the US, as well as cutting back exposure to things like soybeans. There are other sources in the world like Brazil. So that's the question. Why would they go back to a vulnerability of exposure to US supply when they can get this stuff from elsewhere?
It's just simply a make nice with Trump, convince him that he's had a few wins, and sell the US as much stuff as you can while you're making plans to decouple. Basically, you know, the Chinese, they have a very distinct policy. They don't want to be reliant on anyone for any one commodity. Their biggest vulnerability, as they see it, is actually their reliance on Australian iron ore. So that's something that they have been working to reduce as well. But if you look at how they've actually done everything, their whole plan is to reduce their dependency on any one supplier. So if they do go back to buying US soybeans or crude oil or even some LNG, it will be a relatively small percentage of their total imports. But it's enough of a bone to throw to Trump that he feels like he's had a win. He's shown the Chinese he can go back and crow about it on Fox News and the other friendly media in the US and make it seem like he's had a success. Whereas in reality, he hasn't really. And the Chinese decoupling from the US will be something that continues apace.
Let's go down to South America, Venezuela, where things are heating up a little bit and are getting more serious. Jose Shalhoub in Caracas. Jose, what is the state of play from the perspective of Venezuela? We've obviously got this U.S. military buildup in your offshore areas, attacks on so-called drug boats. What is, from your perspective, happening here, and where is it going?
Yeah, thank you, Sean. Well, first, I mean, this is the biggest naval mobilization in the Caribbean Sea in the last, I don't know, 30 years, 40 years, since the crisis of the Cuban missiles. So
I hate to tell you, but that's 60 years ago.
Yeah, that's 60 years ago. Yeah, so this is why this is the first time this has become extremely critical for Venezuela, for the country, and for the government, you know, because ever since the Bolivarian Revolution started, and ever since the era of former President Hugo Chavez, this has become the biggest threat coming from the U.S. government against the Venezuelan government. And well, so far the situation here in Caracas is pretty much normal in terms of the, you know, people are continuing with their daily lives. But yeah, certainly this is the largest mobilization. The U.S. is trying to regain the influence that it kind of lost in the last years in the Caribbean and in South America. You have to consider how the geopolitical dynamics in the region has been changing dramatically. You saw in Bolivia recently how the right came back to power with Rodrigo Paz gaining, you know, the recent elections, presidential elections. So yeah, definitely the state of play here in Venezuela, there's lots of tensions, lots of speculations, lots of psychological operations in social media.
Does it feel like it is more about protecting Exxon's interests in Guyana, where there's been some noise of land disputes, as of course Venezuela lays claim for many decades to the border issues with Guyana, and now there's obviously a lot of offshore oil there. Is it about the U.S. protecting that, or is it more, does it feel like it's more aggressive, more proactive in destabilizing the Venezuelan government and actually looking to replace it? What does it feel like on the ground?
I see both. I mean, because you have something certain that the U.S. government, I mean, they're not going to go ahead with an open wide invasion. That's for certain, because the Venezuelan geography is different. I mean, it's a big country to invade. What the U.S. government is trying to do is promote like a breakup in the military forces, which is something that it hasn't do. I mean, it hasn't reached so far, and it is trying to promote like a social revolt and an economic worsening of the situation here in Venezuela to try to see if with that it could promote like a regime change of government here, you know. But also you have the oil logic, because the Chevron hasn't stopped operations here in Venezuela so far. Chevron hasn't evacuated, its personnel so far, and it's continuing its operations here in Venezuela so far. So, I mean, I see that, yeah, there's a logic, there's a military logic coming from the U.S. government, because the Trump administration is not mobilizing this massive naval ships here in the Caribbean Sea for nothing. I mean, I don't see it that way. It is pursuing something against the Venezuelan government.
Omar, I want to get some thoughts from you on what's changed here, if anything. Again, as Clyde said earlier, watch the action, not the headlines. But we're exactly a month ago, Brent is $70 on Brent. And then, if you want to look at a slightly more recent development since the China announced its rare earth restrictions or plans for rare earth export restrictions that were due to come into place on November 1st. The price at that time was $66, basically exactly where it was, where it is today. My point ultimately is that with all the drama with China, Brent has kind of come back to where it was, this sort of 65 to 67 sort of average, where it's been averaging for the year to date, more or less. So nothing's changed here, or is there something more fundamental, technically or otherwise, that you would identify this as a change moment for the markets?
Yeah, I mean, you have to look long term, right? So we set highs back in 2022, and markets basically been correcting that. So basically, we moved from $10 to 130, from 130 on WTI down to about 55 now. So the market's been, quote unquote, consolidating. But just because it hasn't moved in the last, 8-9 months, basically, or moved sideways since 2023, doesn't mean that it's not going to move. I mean, you just need to look at gold, right? Move sideways for 10 years. So I think a move is coming for oil, and I think that period of consolidation is done. And I think that you need to look at. I mean, I don't think it's a coincidence that you saw gold come off and oil start to rise, because people do rotate out of stuff and into other stuff, right? So if you're managing money and you see basically, you're taking money out of gold and you're looking and you see like oil is the cheapest thing relative to anything ever, lots of money goes into it, and it's still extremely cheap. And the geopolitical situation is still friendly to oil. The macro situation is still friendly to oil. So I think in terms of strategy, I think oil is heading a lot higher. If you look at WTI, those lows at 55 that we saw in April, I think April, May, 55, 55.30, I think they're here to stay for a very long time. We tested them. We went down to about 56.30, last week, or early last week. And that was it. And basically, I think, the test is the lows have held, and you're going to see money come into oil and oil push high. And I think the fact that you can, people will still say, look at supply and all this kind of stuff. Yes, but basically, oil is not only is a financial commodity more than it ever is anything to do with supply and demand. I'm not saying it's zero, but it's much less important. The fiscal situation in the States, the fact that they are, this week is FOMC meeting, they're going to cut rates. It's all stimulatory. It's all going to go up. And oil is the last thing to go up, because it's always historically been the last thing to go up. The US is spending, I think, 23 cents. I read that this morning. 23 cents of every dollar they take in tax revenue, 23% of every tax revenue dollar they take in on interest payments.
It's only that. I would have thought it was higher. It'll be higher tomorrow, because every day it's more than yesterday, obviously.
So at the end of the day, I think that, you look at basically what has the biggest risk reward. So people were looking at gold. They were saying it's moved so much. Let's take money off the table. What are we going to do with that money, right? S&P is quite high. Bitcoin is quite high. They looked at something that's, been unloved, right? Not doing very much. And they were like, you know what? It's a good place to put some money. And I agree with that completely. I think you're going to see much more of that happen. In real terms, whether you adjust for inflation, whether you price it in gold, in the S&P, whether you price it in whatever you price it in,
The price in Bitcoin is essentially free. I mean,
it's so cheap.
Clyde, we had last month data showing after most of the year, China oil imports dropping off in September. Your thoughts on the outlook? I mean, I'm trying to get to where the fundamentals are here. There's a lot of noise in the headlines, trade deals, and all these things, and no reason to believe that China and the US won't continue to headbutt from one month to the next. There might be love-in, and as we've had this year, right? We've had love-ins and we've had hate-ins, and we've bounced between both. But ultimately, the fundamentals of supply and demand that underpin the market, where are they at from a China point of view?
Well, we did actually see in September that China's oil imports fell to like the lowest since January. And that wasn't actually too much of a surprise to me because it always works with a bit of a lag. So you've got about a 6-month up to 3-month lag between oil, when oil is bought and when it physically is delivered. So at the time that September cargoes would have been arranged, the price of Brent and other crude was spiking because of Israel's conflict with Iran and all the tensions around that. So to my mind, it was no surprise that the Chinese pulled back a bit on imports in September. What we are seeing is that October actually looks like there's been quite a bit of a rebound. So if we're looking at September was around 11.5 million barrels a day of China imports, we're looking at October of about 12.1 million barrels a day, so an increase of 600,000 barrels a day, which is fairly significant. And that's just more than anything else a reflection of the fact that prices came off very quickly after the conflict between Iran and Israel petered out. So that sort of underscores the idea that the Chinese are actually fairly price-sensitive buyers. They will buy when they deem prices to be reasonable or cheap. I think that they currently feel that a price above 60 for Brent is reasonable. They'd obviously like it to be a bit lower, but I think they would only really pull back on their buying if the price rose into the late 60s.
And will that see a continued?
70s.
Will that see a continued that sort of 600 you mentioned there in terms of 600,000 barrels of growth from September to October? Will that see a move into storage, that this China storage build through 2025 will continue, which is sort of averaged around 500,000 barrels a day?
Yes, I think the bulk of that will fall into one form of storage or another. Certainly, we know, well, we don't know, we suspect, and we've been told by Chinese refiners that they have a mandate to add a certain amount of more barrels by the middle of next year. And if they see prices at a level that they like, they will continue to do so. The other thing you've got to take into account is quite a bit of this extra oil coming into China is from Russia. So they're quite happy to store that oil. So they're not necessarily buying heaps more from your traditional suppliers out of the Gulf or Africa or South America. They're buying quite a lot more from Russia. And as long as they can do that, I think that's probably what will continue to happen. I think in some ways, to my mind, the China storage play provides a bit of a floor for the oil price, but it also provides a bit of a ceiling, because if the price rises too much, they'll just simply pull back. They're happy to use their stockpiles on a commercial basis. And if the price falls too much, then they'll start buying more. The big question ultimately, but this is probably a question more for 27, 28, is when do they stop stockpiling? How much oil is enough? Right
well,
now,
I suppose it's like when it falls into that area of energy security in an uncertain world with the US, you'd think there's no limit. Let's go back to South America, where, of course, there was a big story overnight, other than Venezuela, which was the results of the elections in Argentina. Javier Milei has had a bumper results in the legislative elections, much greater than expected, where much of the coverage was that he was losing ground. Milei's party got 41% of the votes. So this is a significant against sort of expectation result. Jose, what does it mean?
Yeah, well, it was kind of expected, despite the fact that the government of Milei has been having important internal problems in his team. Recently, the foreign affairs minister of the Milei government resigned. claiming differences with the government. So it's clear that Milei is not having it easy so far in terms of continuing with this plan of government. Surely he's receiving a boost from the Trump administration in all what he's doing in terms of applying different macroeconomic reforms. The U.S. recently supported with an economic aid to the Argentina government of Milei. So yeah, it was expected, this win. It was massive, in terms of what has been expected. But yeah, it was expected, and as I was telling you before, the geopolitical dynamics in South America is tremendously changing on behalf of the U.S. government, and this is what the Trump administration is trying to do.
He's putting sanctions on the Colombia president, who's of the left, and he's financing the right-wing president of Argentina, and the message is quite clear.
That's correct. That's the other thing that I was going to mention to you. This whole thing with President Petro in Colombia, on who the Trump administration applied personal sanctions against Petro and his entourage, not against the Colombian people. So you have Colombia and you have Venezuela, two countries that are aligning themselves, Maduro and Petro, against with all this rhetoric of anti-imperialism. But we'll see what will happen, because the rest of the continent is on the U.S. field.
Where's Lula? Lula seemed the Brazilian president. There's some reporting out of the ASEAN meetings in Asia that they had some friendly talks.
Yeah, Lula is always playing his own game. He's very smart. He's always like a fox. He's playing his own game, considering Brazil's national security strategy. So he's playing his own game. Next year will be elections in Brazil, so we'll see, because Bolsonaro is not doing very well in terms of of his health. But
and this whole shift to the right in South America, if Colombia is indeed the gateway to Trump's change in South America, and the squeeze on Venezuela, the development of Guyana, does this mean ultimately more oil supply coming out of Latin America?
Yeah, that's the other logic, because if we see that the U.S. and then the European Union applied massive sanctions recently against Russian oil, you have to consider the proximity of oil from South America and in the Caribbean to the U.S. It's cheaper, it's closer. So that's the other logic that we have to consider with all these actions coming from the U.S. and the Caribbean.
And of course, the whole Gulf Coast of America is the refining infrastructure there is designed for the crude profile of Venezuela and other Latin countries. Let's go to the survey question and looking a little bit at the meaning of this trade deal. U.S.-China trade deal will consolidate Brent oil back in the $65 to $70 range for the rest of the year. That the deal, we're back to that space where it was before the sort of noise earlier this month of the rare earth fallout, where we dropped away from this $65, $70 range down to test 60. But now we're back with this deal looking like it's going to hold or happen in some form. So my question is, this deal is enough to consolidate Brent back in 65, 70 range for the rest of the year. Who knows what happens beyond then? But in this moment of happy place between Xi and Trump, Brent will consolidate. Omar, looking through the sort of the technicalities that you've referenced in your earlier comments there, that it didn't take out this resistant level and it didn't do the other. That's sort of reflective of what's happened in the past. Looking forward, where are these new technical resistance levels that you've identified that if that happens, then other things can happen?
Well, I think if WTI can get to $66, then that would be like that increases the probabilities that we're gonna move up even more. So from a kind of technical perspective, so technical perspective looks at like, the price and price patterns. So I really doubt that, Brent is going to do something because, Trump and Xi kind of met and nobody knows what they agreed or if they agreed or seen anything. It's just like a headline, like, oh, we have a good deal and we have a bad, all this kind of stuff. I don't think
Yeah.
it's is very meaningful. But I think if you look at kind of the market positioning that you've had basically everybody. You had historical all-time highs on shorts in Brent looking to break those lows equivalent to $55 WTI. They failed. Not only did they fail, but the recovery was a V-shaped one, straight up like, what was it, like $6-7 a barrel. That basically destroys people's psychology. So basically what that does is it makes people or traders gun shy. So when you come and tell them, let's sell because, when you sold before and you got skinned alive, it's not going to happen again. Let's just, now is a good time to sell. They're not going to do it. So I think that, people are misunderstanding or not understanding enough the change in sentiment that's happened. If it was going to roll over and die, it would have. The idea basically that the world inflates on everything, but oil is going to $30, I think is ludicrous. And I think you'll see more and more of an understanding of that. And you'll see positioning shift into oil. And again, the reason is if you look at anything, everything is so expensive. Everything is at all-time highs except oil. So if you're looking to position for something and position for something relatively cheaply, I think oil is very good value here.
Clyde, looking at the again back to some of the fundamentals in this equation in a parallel universe, the other big story alongside this China-US trade deal and is the India-US trade deal. Both of them have or don't have in their sort of terms of agreement, if indeed we ever get to see such a thing, China and India, particularly India, stop importing Russian crude. That's sort of been one of the big sticking points between Washington and Delhi, particularly. Your thoughts on where that goes with these sort of trade deals, agreements, whatever one wants to call them. They can't be agreements in the sense of they aren't congressional treaties. They're just sort of decrees from the president, but ultimately deals that the US is pushing China and India to reduce their Russian oil imports. Do you think that beds in as part of these deals?
I have a great degree of skepticism about that. I think realistically, the only company I see pulling back from buying from Russia is India's Reliance, because it's a sort of global player and won't want to get on the wrong side of sanctions. But I honestly think that India and China are going to keep buying as much Russian oil as they possibly can. If anything, the discount's going to get steeper. You really have to ask the question is, does Trump really want Russian barrels to leave the market altogether? Or does he just want those Russian barrels to deliver less revenue to Putin? I think we're probably more leaning towards the second option there.
Well, that's been the American position since Biden, right? In the last 2 years.
Yes. But it's not what they officially say. They say they want Russia and China to stop buying, which is is different to saying buy but make it cheap. It's just, how many people clip the ticket on Russian barrels before the money gets back to Putin is what they're really, I think, trying to do. So I expect it kind of those barrels to stay on the market and to be discounted quite heavily.
I mean, if you're in India and China, how can you take it seriously when the Europeans are still importing Russian LNG? I mean, it's all a nonsense.
Yeah, I think pointing out the hypocrisy of politics is easily done, but it doesn't really actually alter that people will still try to do it. It seems to me that everyone talks a good game on Russia, and no one really does anything other than you're trying to make Russia get less revenue. But even if you were successful in that, even if they're getting $10 a barrel less than what they would if they had no sanctions on it, is that enough to alter Putin's calculations on Ukraine? Clearly not, because it hasn't made any difference in the last 3 years. So, I expect those barrels to remain in the market, and I think whether oil goes up or down really depends on how the economy plays out next year. I think we're going to reach the find out stage of what Trump's been doing with tariffs and all that inflation and that kind of stuff. And that will be next year. Whether that's good or bad for oil demand overall is very much remains to be seen.
Jose, just to finish up on your earlier point, so this room agrees that 2-to-1 that this China deal will keep prices in 65 to 70 Brent. But Jose, I wanted to get just to pick up on the fact that you mentioned that Chevron is still operational in Venezuela despite the military buildup. There's still production going on, etc. What licensing is that under? If my memory serves me right, it was on this 6-month extension rolling situation, or what's the architecture of that, and can it get more or less, or what is the outlook?
Yeah, this is a very restricted and private license, judging from the U.S. and the White House and the OFAC, that allows Chevron to continue producing oil, especially in the Lake of Maracaibo, offshore, and in the Orinoco oil belt. Chevron will continue producing. Will pay a little bit to the Venezuelan government, but yes, this is an exceptional license that was given by the Trump administration. Yeah, exactly.
And in the capacity to increase production out of Venezuela, if indeed that permission that was opened a bit and wasn't so limited, is there an ability by Chevron to increase its production quickly, or what's the outlook for rehabilitation if indeed all of this U.S. pressure is about more oil rather than less?
For example, in the joint venture called Petroboscan, that's in the Lake of Maracaibo, they're already producing up more than, as far as I know, 110,000 barrels per day. They were producing over 150,000 barrels per day back in the days. But yeah, definitely they're recovering, and they're allowed to recover production in these joint ventures. With PDVSA,
I think that is certainly the interesting thing to watch there. I mean, we saw what happened in Guyana. We're now up to over 1 million barrels a day. And Venezuela, back when I was on the beat of covering oil and OPEC in South America, was at 3 million barrels a day. So there's a lot of capacity rebuilding possibilities there, if indeed they're given that they're down well under 1 million now. So there's over 2 million barrels of oil production capacity that could be rehabilitated over time. It would be a bonanza for Houston and all of those big American Texas oil companies. So there's got to be some dance going on there between Houston and Washington. Omar Najia, as always, great to have you. I hope all is well wherever you may be. Clyde Russell, thank you so much down in Oz, and Jose Shalhoub, thank you as well in Venezuela. Keep up the good work, and look forward to hearing from you again all around the world in 30 minutes. Nobody does it like the Daily Energy Markets podcast. Thank you.
Thank you.
Thank you
very much. Thank you.
Take care. Thank you.